Recently, Pablo Torre, from the podcast Pablo Torre Finds Out, released a very in-depth expose regarding salary cap circumvention by the Los Angeles Clippers and one of their star players, Kawhi Leonard. This was allegedly done through a company named Aspiration Partners, which Clippers owner Steve Ballmer invested $50 million in. Aspiration collapsed into bankruptcy, and two of its directors have been indicted for fraud. Through bankruptcy filings, Torre discovered the existence of a $28 million do-nothing contract with Leonard, which he says is evidence of NBA salary cap circumvention. As far as sports scandals go, it's a pretty big one. The story is a great piece of investigative journalism. If you haven't watched the original podcast, I suggest you do so. There's been a number of updates to that. I think he is up to part 4 of the series. Basically been the biggest story in the basketball world since it broke. And a number of people have commented on it. Some of them are very intelligent comments, some of them are stupid. It's a sports story, but really it's a business story. It's about a company, it's about financial dealings, it's about contracts. I've been in the finance world for 20 years, working at investment managers, banks, and insurance companies. So I figured I had something I'd like to add to that. I really want to take a look at the whole story. The fraud, the company, the contracts, and to see what we can tell about what actually happened. I want to go beyond just the talking heads, just beyond the sports media. So I dug into the financial filings, I dug into the SEC filings, investor presentations, the SEC complaint, the indictments and the plea agreements. I also looked at some of the investigative journalism done by Torre, as well as done by John Corrales at the Boston Sports Journal, and a few other stories that were published in Bloomberg News. I hope you enjoy this. I definitely enjoyed researching and writing this, and we'll see what, if anything, we can tell about it. In August 2021, Kawhi Leonard signs a 4-year, $176.3 million extension with the Los Angeles Clippers. In November 2021, he formed an LLC named KL2 Aspire LLC, the sole purpose of which appears to be to receive payments from Aspiration Partners. In April 2022, Aspiration entered into a contract with Kawhi to endorse the company. The amount was for $28 million over 4 years. Note that it's the same length as the Clippers deal. And his obligations as defined in the contract have been described as minimal. There is a clause which appears to allow him to do absolutely nothing, and he seems to have taken advantage of that clause, as Aspiration released no commercials or print ads or billboards or anything else featuring Kawhi. They didn't even sign a press release when they signed him. There was one condition, though. They would stop paying if Kawhi ever left the Clippers. There's a second contract, reported by John Corrales of the Boston Sports Journal, which says that Leonard was to receive an additional $20 million in company stock. The stock was to be paid out of Sandberg's personal holdings in the company over 4 years, which would bring the total compensation to Leonard to $48 million. In December 2021, Clippers owner Steve Ballmer personally invested $50 million into Aspiration. A year later, in December of 2022, Clippers minority owner Dennis Wong invested $2 million into the company. Shortly after that, in March 2023, Ballmer invested another $10 million into Aspiration. All told, $62 million was invested into the company. $48 million was paid out or promised to be paid out to Kawhi Leonard. NBA teams are bound by a salary cap. They essentially cannot spend more than a certain amount total on all their players. Now, the rules are a lot more complicated than that. There's the mid-level exception, biannual rights, bird rights, luxury taxes, first apron, second apron, designated player exceptions, designated veteran player exceptions, traded player exceptions, and so on. I don't fully understand the rules, and I doubt even hardcore NBA fans know every nuance. But the essence of the rules are that teams are limited on how much they can spend on players. The question is whether the deal between Kawhi and Aspiration existed to circumvent the salary cap. The question is whether Ballmer surreptitiously paid Kawhi under the table, giving the Clippers more flexibility to sign other players and avoid various penalties imposed by the salary cap. It certainly looks like it could be circumvention. Money flowed from the Clippers to Aspiration and from Aspiration to Kawhi. The key question is whether these transactions could be anything else. Could the investments just have been investments? Could the endorsement deals have been a legitimate endorsement deal? If the answers to these questions are no, then really the only reasonable explanation we can draw is that it's salary cap circumvention. Now, the only party to every transaction was Aspiration Partners. So it's a company which has declared bankruptcy since then, and 2 of its directors have pleaded guilty to fraud charges. So in order to understand the deals, we need to understand Aspiration And in order to understand Aspiration, we need to understand the fraud that was committed there. The fraud had two major parts. The first part involved borrowing money, and the second part involved faking revenue using that borrowed money. Both Joseph Sandberg and Ibrahim El-Husseini have pleaded guilty to these allegations, so I'm comfortable concluding that they did in fact commit the crimes. Nobody else involved in Aspiration has been indicted, convicted, or to my knowledge even accused of anything. Before we begin though, let's talk about the psychology of frauds. Large-scale financial frauds rarely begin as frauds, and the people who commit them don't think of themselves as fraudsters or scam artists. They think of themselves as businessmen who just happen to be involved in fraud, not fraudsters who just happen to be involved in business. I don't say this as a way to excuse or exonerate anyone. The fraud that was committed here is about as bright line, as egregious as you can get. But I think it's worthwhile to keep this in mind to understand why Sandberg and Al-Husseini may have done certain things. Aspiration, the company, had two businesses. The first was the carbon impact business. This is selling carbon offsets, promising to plant trees. You pay a fee, Aspiration plants a tree, or says they'll plant a tree. The second is kind of as consumer banking, although Aspiration is not actually a bank, it was never FDIC insured. Basically, they had like a green debit card that earned special cashback bonuses when it was used for shopping at environmentally conscious partners and retailers. So what Sandberg did was he borrowed from his investment fund managed by Swiss bank UBS. From here on out, I'm just going to refer to the investment fund as UBS, but just technically speaking, they're separate legal and financial entities. So Sandberg borrowed money from UBS using his stock and Aspiration as collateral. Now this is not a great deal for UBS. They face what's known as wrong way risk. Basically, their collateral is his life's work, and if Aspiration goes under, he's not going to be wealthy, he's not going to be able to repay the loan, so his collateral is kind of worthless. So what do? Same thing you do when your teenager needs a car loan. You get a cosigner. Ibrahim Al-Husseini, another investor in Aspiration, a member of its board of directors, acted as a cosigner. Technically speaking, he agreed to write UBS a put on the collateral that became effective in the event of a default. But what's important though is that if Sandberg didn't pay, the lender could go after Al-Husseini for the debt. Now, in order for this to work, Al-Husseini needs to demonstrate that he's got sufficient funds to cover the loan. He did this by providing brokerage and banking statements showing that he has enough assets. The issue with this is that he didn't have enough assets. Brokerage statements and banking statements that were provided to UBS were actually doctored. He hired a graphic designer, changing the balances from some on net from around $15,000 to $200 million. Now, I don't really need to elaborate on this. It's fraud. The second part of the fraud was to boost the revenue of Aspiration. From 2020 onward, Joe Sandberg would set up LLCs or find willing participants with foundations or an LLC and instruct these third parties to buy carbon offsets from Aspiration. He would then use an investment entity he controlled, Apogee Pacific LLC, to either move money to the LLCs or to pay the invoices on behalf of the entities. And occasionally, they just wouldn't pay at all. What you really need to understand is he essentially walked out of the Aspiration offices, put on a fake mustache and trench coat, walked back in and said, I want to buy some carbon offsets. He's using third parties to do transactions as if they're arm's length deals instead of related party transactions. So if we put these two frauds together, we have a picture. Sandberg borrowed money using the value of the stock in Aspiration as collateral, funneled the money to shell companies, and then had those shell companies buy carbon offsets from Aspiration as if they were engaging in real business. They then reported those transactions in their financial statements as revenue, and they look impressive. In 2021, according to their financial projections, revenue increased by something like 700%. It looked like an excellent growing company. And this creates a self-reinforcing cycle. Step 1, you take out a loan against the value of stock in Aspiration. Step 2, you move it to a shell company. Step 3, you use it to buy carbon offsets. Step 4, the value of the company Aspiration increases by a multiple of what was spent. And step 5, you take out another larger loan. In January 2020, Sandberg borrowed $55 million. Beginning March 2021, Aspiration received payments from these shell companies. In August 2021, Aspiration agreed with a transaction with a company named Interprivate 3 to raise about $400 million in cash, valuing Aspiration at $2.3 billion, although I'll note the deal never closed. In November 2021, Sandberg borrowed an additional $145 million. In December 2021, Aspiration raised money from investors Oaktree Capital Management and Steve Ballmer. The cycle appeared to be in full swing. At first glance, it looks like an infinite money-making machine. But of course, it's really more like a house of cards. There are a variety of reasons it can't go on forever. You would need to continuously borrow more and more money to keep the cycle going. You would need to pay interest on the loans he's already taken out. And he would need Al Husseini to forge more and more documents to justify these loans. And the larger the forgeries become, the more suspicious people are going to get. So, all in all, Sandberg appears to have been able to go through the cycle only twice before it blew up. Now, let's go back to what I said about the psychology of fraudsters. And I want to be clear, I'm just speculating here. But I think their aim was to eventually go legit. They'd borrow, they'd inflate and raise the money that they used to get real customers, and then they phase out the fake revenue and have a real functioning, profitable business that's making money and fighting global warming at the same time. But there's really no exit to this fraud. Either it grows into a legitimate business, or you just go to Argentina. In November 2020, this is before the fraud I've described is even in full swing, Sandberg texted the following to co-founder Andre Cherny. This is the great quote. "Figure out how to get me the money tomorrow or I'll be in default. It's your turn to do what needs to be done. But if you don't get me the money tomorrow, we're all effed. Get me the money. Your turn to figure it out like I have for so long. Wire it to the Sandberg entity account. If you don't, then the lender will foreclose. This will give you a good taste of what I have to experience every day. I hate you and I hate this company and I don't want to work anymore with you. You are so oblivious to what you force me to have to do." I think that tells you everything you need to know about what motivates these guys. It's not like greed or money. It's not getting cars or glamour or status. Maybe that's why they started. But once you start, it's just about keeping the fraud going. It's about doing whatever you have to do to keep up appearances and just delay the day of reckoning, even, by a week. If you've ever read a murder mystery novel, you're constantly trying to figure out who did it. That's basically the point of the genre. You're the detective and you want to see if you can figure it out before the detective in the book does. Now, if you skip ahead and read the ending, or if you look up who the killer was on Wikipedia and then go back and read the book, all the clues are going to be obvious, as will the red herrings. It's a difficult task to read the novel and try to imagine if the clues are ones you would have picked up on, knowing, the result of the book. That's kind of what we're trying to do here. We know there's fraud, we know the nature of the fraud, we know how the fraud happened. But looking at it now, could we have figured out the fraud by looking at the financials that were available at the time? In December 2021, Aspiration raised a total of $315 million, including a $50 million investment from Steve Ballmer. Aspiration used an investment presentation as part of their pitch. ProPublica found that and put it online, and we're going to look through it. 3 numbers really jump off the page to me. The first is revenue growth, which is 7 times revenue growth in a single year. The second is the 12.2 LTV to CAC ratio. And the third is their marketing spend, $149 million a year. Overall, it seems like it's a crazy company, growing very quickly but nowhere near financially secure yet. Their central product, Enterprise Sustainability Services, grew from almost nothing in 2020 to over a then projected $50 million in 2021. And although it was spending a fortune on marketing, $150 million, it was getting a handsome return. What the LTV to CAC ratio measures is essentially the total value of a customer over its lifetime to how much it costs to get. A ratio over 1 means the marketing is a net positive. A ratio of 12.2 means that for every dollar of marketing you spend, you're increasing the value of the company by $12.20. So long story short, it's growing quickly, it's spending a ton, but it's poised to get it back, at least in theory. Aspiration agreed to merge with another company, Interprivate 3, in August 2021. When it did that, it had to create a document known as an S-4 filing, which is publicly available on the SEC website. And so this shows a more detailed financial statement for Aspiration. So looking at the balance sheet, the first thing that jumped out to me was a $13.4 million in cash, which, if you compare that to the investment presentation, which shows 2021 cash of $368 million, a huge difference. Now, the source of that difference is the fact that the investor presentation is showing estimated financials, which basically means that it's assuming the merger with Interprivate 3 is going to close. That has a giant pile of cash. Now, this never actually happened. You can also see $37 million of receivables compared to $2.6 million for 2020. It also shows revenue growing from $9 million in the first 9 months of 2020 to $62 million in the same period of 2021. The expenses are also a bit wild. $90 million for advertising, $44 million in professional fees, up from $9.5 million. And then quickly for cash flow, negative $78 million, basically 9 months for $75 million means that the burn rate is $100 million a year. Finally, let's take a look at the opinion of the auditor. The statement is, in our opinion, consolidated financial statements present fairly in all material respects the financial position of the company as of December 31st, 2020 and 2019, and the results of its operations and its cash flow for the years then ended, in conformity with U.S. generally accepted accounting principles. Also notes that they've served as the auditor since 2021, and what I say would be the four most important letters in the whole filing, KPMG. For those of you who don't know, KPMG is one of the big four accounting firms, along with Deloitte, PwC, and EY. They're the gold standard of accounting firms. Now, often frauds will have independent auditors who are really tiny or even non-existent. The Bayou funds, for instance, a hedge fund which stole $92 million from its investors, which I might do a video about someday, set up their own fictional accountant named Richmond Fairfield to be a quote-unquote independent auditor. No such thing as Richmond Fairfield. If you Google Richmond Fairfield, you just get a listing of Fairfield Inns in the city of Richmond. Bernie Madoff's firm was audited by a two-person outfit named Freeling and Horowitz. Basically, they would rubber stamp audits, and because they're so small, they couldn't afford to lose the Madoff business. Now, when you see KPMG, the two things you know is that neither their independence nor their expertise is going to be in question. So let's look at the individual clues. Revenues are skyrocketing, growing 6 times in a single year, but so are outstanding receivables, which total $37 million. If we do some math and divide the revenue by the outstanding receivables balance, we can calculate the days of outstanding receivables. For instance, if you sell $100 million of widgets in a year and you don't collect any money for those sales, you essentially let the invoices pile up, you'd have 1 year or 365 days worth of uncollected invoices. Here we can see the days of outstanding invoices went from 99 days in 2020 to 174 days in 2021. September of 2021, I should say. This is alarming. Now, if we compare that to the projected 2021 year-end financials, we see the balance falling to $17.7 million or 82 days, back to about normal, certainly what it used to be. This drop seems extreme, but keep in mind this is a one-line item which should be the easiest to project because you just know, or you should know, when your clients are actually going to pay you. Payables balance also shot up, not as dramatic. Overall, it's tough to say whether or not I would have been able to figure out it was fraud. Probably not, but I probably wouldn't have invested. Yada, 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 who knows. But the thing is, the biggest clue, it's the receivables balance. It's the increase in the days of outstanding receivables balance, which doubled from 2020 to 2021. Not even doubled in a year, doubled in 9 months. And this is indicative of fraud because you can't bill a client for services if that client doesn't exist. So let's look at the investment that Ballmer and Wong made into Aspiration through the lens of what they would have known when they made the investments. In 2021, Ballmer invested a hefty sum of money into Aspiration, which was growing quickly but in a somewhat precarious situation. He wasn't the only one. Oaktree, an alternative asset manager with over $200 billion of assets, also invested. It's kind of safe to think of this as like a lotto ticket type investment. It's probably never going to become profitable, but if it does, it could return 5, 10, or 20 times the investment. But that's just the first time Ballmer invested. Pablo Torre found an additional investment from Donald Wong, the minority owner of the Los Angeles Clippers and close friend of Steve Ballmer, of $2 million made in December 2022, just days before Aspiration wired its late quarterly payment of $1.75 million to Kawhi Leonard. Now, how different was this than the previous investment? Well, a lot happened in Aspiration in the year 2022. Per the SEC complaint, on March 18, 2022, an Aspiration accountant lodged an internal complaint to express concerns about related party transactions pertaining to Aspiration's reforestation services business, lack of supporting documentation for LOI customer revenue, Aspiration's uncollected balances, and invoicing returns. And elsewhere in that document, on or about July 5th, 2022, after the creation of the special committee, KPMG resigned as Aspiration's outside auditor, citing, among other factors, revenue transactions that had characteristics of fraud. Remember when I said one of the red flags for fraud was increasing accounts receivable balances? Well, another red flag is when its outside auditor resigns, citing transactions that had characteristics of fraud. Now, we don't have any financial statements past December 2021. They stopped publicly filing them to the SEC. But based on facts in the SEC complaint, I estimated that the June 2021 to June 2022 reported revenue was $147 million. I'm taking the geometric midpoint between the 2021 published revenue and the 2022 revenue mentioned elsewhere in the SEC complaint to use as the last 12 months revenue in June 2022. And also, per the SEC, the receivables balance on that date was $104 million. Now that gives us a figure of 257 days of outstanding invoices, increased of 84 days over just 9 months. The receivables balance has increased so much that it had to be alarming to anybody with a cursory knowledge of finance. Dennis Wong is no dummy. He's got a Harvard MBA. He's been in business for 40 years. He can analyze a financial statement just as well or better than I can. He knows what it means when receivables grow much faster than revenues. And he knows what it means when an auditor quits. Pablo Torre had a copy of the agreement that Wong signed, which includes a list of disclosures about Aspiration. One of them states that KPMG resigned as auditor. But the first one says Aspiration is in default, and then whatever it is that they're defaulting on has been blurred out. But generally speaking, default is a bad word in finance. It's also item number 1 before the auditor quitting, leading me to believe that the finance team at Aspiration thinks it's more important than the auditor quitting. Maybe he was getting a discount, though. Buy low when everything looks awful, and when things recover, it could be great, make bank. Again, according to Torre, after investing, Dennis Wong owned 0.72% of the company, which, if we do the math, gives Aspiration an implied value of $2.77 billion, which is right in line with what the SPAC negotiated for and at a higher price than what Ballmer paid a year earlier. In March of 2023, Steve Ballmer invested another $10 million in Aspiration, as reported by The Athletic. It doesn't give much more information than that, what the terms were, what the disclosures were, but I think we can assume they disclosed at least as much as they did to Wong 4 months earlier. And again, what I said about Wong not being a dummy applies just as much as it does to Ballmer. He was the CEO of the most valuable company in the world. The man knows how to read a balance sheet. He knows what an auditor is. And he had to have known that Aspiration was having trouble paying its bills, given that it was having trouble paying the Clippers their sponsorship fees. The SPAC deal hadn't closed for a year and a half. The average SPAC takes about 110 days to close. And in 2023, you'd have to wonder if it ever would close. And spoilers, it didn't. Now, let's return to this question. Could these investments be justified as bona fide investments? The $50 million investment from Ballmer to Aspiration could be explained as legitimate. After all, Oaktree invested, and they don't appear to have any ulterior motive. No salary cap to circumvent, no fraud to continue. They're a sophisticated asset manager, and they looked at the company and determined that the risk they incurred by investing was justified by the potential returns. $2 million investment from Wong to Aspiration in late 2022 and the $10 million investment in March 2023 are other matters. These were after KPMG resigned as auditor, after the company had been default on something, and at least one, but probably both, were after they restated the revenue. The company was late on outgoing payments, probably including to the Clippers, and they were laid off their staff or were in the process of laying off most of their staff. Investing in Aspiration in 2021 was crazy, but it was crazy in a defensible way. They were burning money at a $100 million annual rate, but it appeared they had a bright future, or at least the possibility of a bright future ahead. It was high risk, high reward. By late 2022, things changed. It was still high risk. They were still burning money, but the reward was gone. 5 times revenue growth in a year was impressive, but not when that revenue is revealed to be fictitious. 12.2 times LTV to CAC ratio is great, but the lifetime value of the customer is 0 when the customer is revealed to be a shell company operated by an insider. And just to clarify, neither the Wong nor the Ballmer investments were at a discount. They were at a higher valuation that was paid in 2021. You know that toxic saying people use to justify their bad behavior? If you can't handle me at my worst, you don't deserve me at my best? Well, in this context, 2021 was supposed to be the worst. It was supposed to be the hard times that justify the later reward. They were spending a fortune on advertising, blowing through cash like there's no tomorrow, and skipping payments to vendors. The bad stuff, the cash burn and the excessive spending on marketing, those were supposed to go away once the business stabilized. And the good stuff, the revenue and the customers, they were supposed to stick around and grow. But that's the opposite of what happened. The bad stuff stuck around and the good stuff evaporated or was never there in the first place. Now, it's difficult to answer anything in this world with an absolute. I can't say with absolute certainty that these investments could not have been made for legitimate economic purposes, but it comes about as close as possible. The evidence for fraudulent activity was all over the place. Just think about it. The company was cooking the books. They were forging documents to get loans, which they then used to create fraudulent customers to pump money back into their operations. And even then, even with this fraud, they were still showing massive losses. Are you telling me that anyone with half a brain cell is going to look at this company spending so much money to the point we're down to a month's worth of cash, and then you find out that the auditor quit because of, and I quote, revenue transactions that had characteristics of fraud, and that the horrible losses they incurred in 2021 were actually worse than they appeared? You're telling me that someone looked at all this and still decided to invest? It simply isn't plausible that Dennis Wong and Steve Ballmer invested in Aspiration in 2022 and 2023 respectively because they believed it represented a favorable risk-reward ratio. Now this brings us to the endorsement deals. One for $28 million to be paid over 4 years from Aspiration, and another for $20 million in Aspiration stock to be paid from Joe Sandberg's personal holdings. Let's talk about celebrity endorsement deals. Certain industries are better matched for some celebrities than others. Most natural is basketball players and shoe companies. Athletes are really good at selling shoes. They're super important for sports, and everybody, even if you're not an athlete, wears shoes. Now, this is basically the reason why Michael Jordan is a billionaire, because Nike paid him and still pays him so much. Financial services firms aren't as big a sponsor as shoe companies, because the vicarious thrill of wearing the same shoe as Michael Jordan is much more tangible than whatever thrill you get knowing you use the same stockbroker as Lee Trevino. Now, that's not to say that celebrities are worthless to financial companies. They're just not worth as much. The best illustration I can give of this is from Capital One Financial. Capital One is one of the largest credit card issuers in the U.S. with over $500 billion in transaction volumes a year. They signed pop megastar Taylor Swift, perhaps the most famous person in the world, at least if you exclude heads of state or major religious figures, to a deal that was reported to be worth $8 million. I don't know the source on this, and it's not exactly public knowledge. Neither Swift nor Capital One wants that information public, but it's at the very least the number that people think is a reasonable amount. Now, here's the crux of the issue. There's no way that Kawhi Leonard, somewhere around the 5th to the 10th best player in the NBA over the past 10 years, is 5 times more valuable than Swift, the most successful entertainer of the past 30 years, if not ever. John Corrales of the Boston Sports Journal reported on the existence of the $28 million stock contract. And a lot of people latched onto that for being really significant, but there was another detail in his story, which has since been corroborated in other words, that I think is even more relevant. Per Corrales, according to our source, none of the high-powered executives at Aspiration were consulted about the massive $28 million endorsement deal. Typically, the chief financial officer would have run an analysis on the return on investment, the chief legal officer would have negotiated the contract, and the chief marketing officer would have developed the branding synergies. According to insiders at Aspiration, the team was never given the opportunity to perform any of these tasks. Had they followed typical procedures, BSJ has been told they would have objected to the deal. Now, this detail has been confirmed by several former executives in a public statement, so it's a contract which doesn't make sense in terms of what celebrities normally receive for this type of company. It doesn't make sense to me as an outsider, but it also doesn't make sense to the people inside the company who negotiate these deals. But none of this is the most glaring flaw in the transaction. The most glaring flaw is that Kawhi Leonard never raised a finger to help Aspiration in any way, shape, or form. He did no commercials, no photo shoots, no publicity events where he planted a tree, no tweets or retweets, no Instagram posts, no Instagram likes, no use of his name in an ad. There wasn't even a press release sent by Aspiration when they signed him to this deal. What did I say a second ago? That it's difficult to answer anything in this world with an absolute? Well, there are exceptions. This deal absolutely was not for normal marketing purposes. It simply couldn't have been a normal services contract. Kawhi Leonard performed no services for Aspiration. But maybe it wasn't for salary cap circumvention. Maybe it was for some other hidden, bizarre, or illegal purpose. Let's hypothesize what these might be. Money laundering. Well, what exactly is money laundering? Usually it means turning money from an illegal purpose into seemingly okay ones. If we believe that Aspiration helped Kawhi launder money, well, first have to believe that Kawhi Leonard was a drug kingpin or something. Zero reason to believe this, so I'm just going to say no. I mean, you could argue that the NBA cap circumvention scheme would be a type of money laundering, but we're just splitting hairs and it doesn't really answer the question. Second theory is tax evasion. This isn't quite as crazy as laundering drug money, but it still doesn't make any sense. For it to make sense, he'd have to somehow get money to Aspiration before it was taxed and then have it sent to him in a tax-advantaged way. So essentially, he's making money over here, able to put it off as an expense to Aspiration and then have Aspiration pay it to him in a way that he'd be a lower tax rate than he would have gotten in the first place. But neither of these things are in evidence or make sense. There's no evidence of him sending any money to Aspiration, and I can't think of a way he'd be able to get that much money tax-free. He'd have to own a business which could deduct $7 million a year for an expense which he can allocate to Aspiration. And then he'd have to get it back from Aspiration in a tax-free way, which it simply isn't. The money he'd get from Aspiration is taxed at his normal rate. Third thing is maybe Kawhi was somehow involved in the fraud. Okay, so this is somewhat reasonable. Aspiration did have so-called round-trip endorsement contracts where they hired celebrities, typically retired Colombian soccer players or actresses, for endorsement deals where the celebrities would be paid by Aspiration and then turn around and buy carbon offsets from Aspiration. It's got one huge similarity to the Kawhi deal in that it involves no-show endorsement deals, but there are some issues with it. Let's describe this hypothetical for now round-trip deal. Aspiration agrees to pay KL2 Aspire LLC $7 million a year, purportedly for endorsements. Meanwhile, KL2 Aspire LLC, or some affiliated entity, buys carbon offsets from Aspiration for some value below the $7 million. Aspiration gets to call the transaction revenue, and Kawhi makes a small profit. But this doesn't work unless there's a tax deduction. Kawhi presumably pays the top federal tax rate of 37%, and the top California tax rate of 13.3%. So he's paying a little bit over 50%. To be profitable for Kawhi, he'd have to pay less than half back to Aspiration. So if he's getting $7 million a year and he's paying out $3.5 million, he's losing money on taxes. In the Bloomberg story that broke these contracts, a lot of them are nonprofits, such as the Elizabeth Loiza Foundation, the Young Israelis of North Beverly Hills, and the Hidden Light Institute. But what really kills this theory is that the SEC investigated this. They had access to internal workings of the company, described in detail the fake revenue fraud, and they don't mention Kawhi Leonard at all. Here's a list of the LLCs which participated in the scheme. Notice how there's no KL2A in the list, or KLA, or KA in the list. But every other LLC in the Bloomberg article is there. YINBH, HLI, ELF, etc. For this to work, they'd have to have Aspiration pay Kawhi, have him turn around and pay Aspiration, but we've got no evidence of this second half of the scheme. No payments from Kale to Aspire back to Aspiration. No SEC reference to anything that could be the Kale contract, and no mention of Bloomberg. Bloomberg looked into the managing partners of every LLC they could find. Kawhi Leonard is listed as the managing partner for Kale to Aspire. Why wouldn't Bloomberg mention this? Did the SEC find a bunch of $50,000 a month investments and then somehow miss the $28 million deal? The reason the SEC doesn't include the deal in their complaint, and the reason the Bloomberg doesn't mention it, is probably because it wasn't involved in the fake revenue fraud. And then there's the term, 4 years. If Aspiration was going to do this, why on earth would they oblige themselves to a 4-year term? And why include the clause about termination if Kawhi was no longer played for the Clippers? If they're doing a round-trip payment to boost revenue, why does it matter what team he plays for or that he plays for any team? There's no enforcement clause. Presumably there would be another contract from some other entity Kawhi controls which buys the carbon offsets, also for a 4-year term. But what happens if this second entity stops making payments? If the mystery LLC declares bankruptcy, Aspiration's still on the hook for the money it owes Kawhi. It'd be so easy to create it out. All you have to do is write, either party may terminate this clause by providing 30 days notice to the other party. Finally, and this applies to the potential scam or to almost any other hypothetical scam you can think of, if you're writing a fraud, the people you're defrauding are the investors in your company. Steve Ballmer is an investor in the company. He owns the Clippers. Kawhi Leonard plays for the Clippers. Do you really want to involve a known associate of one of your biggest investors as an unwitting accomplice to your fraud? Isn't there a chance he might accidentally tell Ballmer about the payments without realizing what they are, and then Ballmer would rightfully recognize the fraud for what it was? Of course, this doesn't apply if Ballmer is in on the scheme, and what could he be in on, except for a scheme to evade the salary cap? I cannot think of any reason other than the NBA salary cap circumvention for this deal to exist. But let's move on to the other half of the deal, where Joe Sandberg, not Aspiration, pays Kawhi in stock. This was reported first by John Corrales of the Boston Sports Journal, and didn't go into the same level of detail in the contract as Torrey did on the other contract, but we do know the face amount of $20 million and the fact that the shares came from Sandberg personally. Now, generally speaking, a CEO has broad discretion to run the company, including entering into agreements, negotiating contracts, etc. He or she can spend whatever cash they deem necessary for any business-related purpose. But what they generally can't do is offer stock in the company. Stock transactions have to be approved by the board of directors. So what this tells me is either that Sandberg didn't want to bring it to the board, or he brought it to the board and they shot it down. But it was so important to get the deal done that Sandberg would pay out of his own pocket, but not important enough for the board to approve it. Let's look at this quote from Sandberg again. "I hate you and I hate this company and I don't want to work anymore with you. You are so oblivious to what you force me to have to do." Sandberg is trapped in a fraud. He needs the company to continue. There must be something he desperately needs, and ensuring $48 million goes to Kawhi Leonard is the only way he can secure that thing. If that thing is $50 million cash investment now, then that makes sense. Again, keep in mind, they were down to 1 month's worth of cash in the financials on September 30th, 2021. Getting an additional $50 million from Ballmer would potentially be enough to keep the fraud going for a little bit longer, if not to the time when the SPAC closes. So far in this script, I've written 7,000 words, more or less. Spoken for a half hour at least. If you're still listening, thank you. But I could talk about other things. I could talk about how the timing of the individual payments into and out of Aspiration is suspicious. I could talk about how the Toronto Raptors and Los Angeles Lakers reportedly had conversations with Kawhi where his camp demanded very similar arrangements, no-show endorsement deals, and equity compensation. I could talk about how multiple employees at Aspiration flat out told Torrey that the deal was to circumvent the NBA salary cap. I could talk about how the league got very suspicious of the original Clippers Kawhi signing in 2019 to the point where they ordered investigations about potential salary cap circumvention. I could talk about the Clippers were punished in 2015 for arranging endorsing deals with outside companies for one of their players. All these things point to the deal being circumventing the salary cap. People want a so-called smoking gun, but the reality is there is one, and Pablo Torrey produced it day one. The $28 million contract is a smoking gun. There's no reasonable explanation for it except salary cap circumvention. The terms within the contract are laughable, and there's no evidence Kawhi abided by those laughable terms. Let's look at a hypothetical. Alice is known to have a grudge on Bob. Alice has made multiple threats against Bob, saying that she was going to kill him. One day, Bob is murdered. Police find Alice's fingerprints in Bob's apartments, and people saw Alice in the vicinity on the night of the murder. She tells police she was with her friend Charlie, but Charlie doesn't corroborate her alibi, saying Alice definitely wasn't with him that night. Bob was shot with a .22 caliber pistol, and weeks before the murder, Alice bought a .22. When they search her home, they don't find the gun. She says she lost the gun and doesn't know where it is, but they do find a key to Bob's apartment and several valuable items which definitely belong to him. In this example, there's no direct evidence tying her to the murder. Nobody saw her do it, and she didn't confess. You can concoct stories about how each piece of evidence came into being that don't involve her murdering him. She could have been in Bob's apartment at a different time, and that's why she had the key and took the other belongings, and that's how her fingerprints got there. Maybe Charlie was lying about Alice being with him, or maybe he was mistaken about the day. Maybe the people who said they saw Alice in the vicinity were also mistaken. Despite this, the evidence is overwhelming that Alice killed Bob. There's no direct evidence of NBA salary cap circumvention. No email from Ballmer saying this investment is actually to pay Kawhi Leonard in excess of what we can under the NBA collective bargaining agreement. You can concoct wild stories about how each piece of evidence came into being, but despite this, the evidence is overwhelming that the Clippers organization or Steve Ballmer participated in a scheme to circumvent the NBA salary cap.